Oh, you're welcome back. For the weekend, the 7th of March 2022, deals on the AFEX commodity market dropped by about 30%. That's why we have Michael Martins now, the portfolio manager, joining us for the details from our Abuja studio. Hello, Michael. Good morning.
Hi, Ine. Good morning. It is always a pleasure to be here.
Good to have you, Michael. So what's going on? Well, give us a summary of what happened with the drop, 30% drop in deals.
Thank you very much, Ini. So if you look at the table in front of you, it gives a summary of what happened on the exchange in the week under consideration. The total value of transactions traded on the exchange, which is equivalent to the total turnover, went up by a factor of 3.8 from 0.95 billion to close the week at 3.66 billion. The total volume of contracts traded on the exchange also went up by a factor of 5.9 from 2.34 million contracts to close the trading week at 13.82 million contracts. And the total number of deals, however, fell by 30.2% from 487 deals to close this trading week at 340 deals. The ACI, which is the AFEX Commodities Index, fell slightly by 2.62% from 481.02 points to close the week at 468.39 points. The AFEX Export Index, however, went up slightly by 1.60% from 195.52 points to close the week at 198.65 points. With regards to the volume of contracts traded on the exchange, we generally saw a large increase in the volume of contracts, with the major culprits being maize, which went up from 575,000 contracts to close the trading week at more than 8.9 million contracts. Paddy rice also went up from 801 contracts last week to close the trading week at just over 4 million contracts. Ginger, cocoa, and sesame also traded higher volume this week in comparison to the previous week. Soybean, however, was one of the very few commodities that fell with regards to the volume of contracts, trading lower from 1.26 million contracts last week to close at just over 88,000 contracts this week. With regards to price changes on the exchange in the week under consideration, we saw the biggest changes happen with maize, which went up by 2.68% to close the trading week at 232.54 naira per kilogram. Cocoa also went up by 2.20% to close the trading week at 1,300 naira 0.13 kobo. Paddy rice also went up by 2.13% to close the trading week at 235 naira 0.64 kobo per kilogram. Soybean was the last to go up in the week under consideration, going up slightly by 0.04% to close the trading week at 401.92 naira per kilogram. We, however, only saw a decline with one of the commodities on the exchange, and that was sorghum, which fell by 3.41% to close the trading week at 226.95 naira per kilogram. And those are largely some of the price changes and also volume changes that we saw on the exchange in the week under consideration. And as we always mention, if you want to know more about the commodities market and if you want to get started trading commodities, you can always download our app, which is available on iOS and also on Android.
All right, so in the light of recent events, what are the implications of capital flows on the commodities market?
Thank you very much for that question, Ini. I think the first thing we can note about what has happened in recent time is that there's been a lot of uncertainty about the general financial market, but more importantly, in this case, the commodities market. And what tends to happen during periods of uncertainty is that investors are risk on. And what that means is that capital tends to flow away from equities and other risky assets into the fixed income space. What we have seen happen in recent weeks is capital flowing out of the equity space into the fixed income space, and then, of course, as it concerns the commodities market, the commodities market itself, the alternative space. And what tends to happen during periods of uncertainty, at least in the short term, is what we refer to as backwardation in the commodity space, which means that today's spot prices for commodities would essentially be higher, than what you have for the futures prices, which is a bit of an anomaly in any given scenario. What also tends to happen, right, over the long term is what we essentially also refer to as commodity super cycle, which is when commodities have sustained higher prices, sustained higher base prices at every other year for an extended period of time, which is what we are seeing play out in the commodities market in recent years. It is also important to note that commodities super cycles tend to sustain themselves based off of demand. And what this means is that commodity cycles are usually better off if they are demand boosted or a demand side commodity cycle. The first commodity super cycle that we had at the beginning of the millennium was caused by approximately 400 billion people essentially becoming richer out of China, which essentially boosted the demand for commodities. It does seem like the commodity super cycle that we are having at this time period are more or less caused by supply chain and supply constraints, which has partly been due to what we had with COVID-19 and then also the uncertainty that we have had, with Russia and Ukraine in recent weeks.
And when we talk about super cycle, what implications does it have on the global economy?
With commodity super cycle, I think one thing is self-evident. There are three broad implications that we will touch on, but I think the first and probably the most pressing one at this moment would probably be inflation. Right, like I mentioned earlier, commodity super cycle are essentially higher commodity prices that sustain themselves, over an extended period of time. What that very often transfers into is that you immediately have higher production costs, right? So for processors and people who use commodities on a day-to-day basis in their production process, you essentially have higher production costs. In no little time, that higher production cost is also transferred, into higher consumer prices, which of course is evidenced by high inflation. And what this does is that it reduces the purchasing power of the average individual, in any given economy. And if this sustains itself for consecutive quarters over the course of an entire year, what tends to happen in that country is you then see an economic recession, right? Which some economies are currently flirting with. For example, the United States, which has had the highest inflation rate, I think between 7 to 7.5%, which is the highest in about, in about 2 decades, right? So what tends to happen is you see higher inflation. You also then see, if that inflation is sustained over an extended period of time, you then also see an economic recession. And what also is more important for us as a company to also note, and maybe also as an economy to also note, is that it essentially now becomes way more difficult, right, to become food secure as a country, because higher commodity prices lead to, like I said, lower purchasing power for the average Joe. And what that means is that for people who don't necessarily see an increase in their income follow in tandem with increase in commodity prices, what tends to happen is that they tend to fall below the poverty line, which then brings to question whether or not how more increasingly difficult it becomes for a country to become food secure with higher commodity prices.
All right, Michael, thank you so much for bringing us up to date on that. I will just shift a bit and talk about some other thing connected to AFEX. Now, the agricultural risk landscape is shifting, with producers increasingly confronting new sources of risk caused by changing climate, anticipated changes in policy, or the economy-wide effects of shocks external to agricultural sectors, such as the global pandemic. I mean, now we have the Ukraine war, and both countries are deeply embedded in world's agricultural and food market. Hence, it's influenced crude oil prices, commodities, and most especially, we've been talking about wheat and, the financial market. So the big question is, how do we confront these shocks with the goal of either reducing the negative impact or significantly reducing the likelihood that those events occur. Well, to attempt to answer this question, we have Hemense Oka, Vice President, Corporate Services at AFEX. Hello, Hemense. Good morning.
Hello, Ini. Good morning. Pleasure to be here.
Good to have you. So one of the identified ways to confront the shocks and risk in the agricultural sector has been through disciplined application of holistic risk management strategy. Now, being a proactive rather than reactive, what proactive measures should we be putting in place at this time?
Yeah, so when we talk about risk, we're looking at any acute shock or hazardous element that's going to take place. And there's no one-size-fits-all solution to this, but it's about developing a holistic framework in which an approach that you can use. So here at AFEX, we like to look back retroactively and see what type of risks have occurred in the past that's distorted the market, and also potentially what could occur now in the future. There's a saying that says, never let a good or never let a bad crisis go to waste. Not to make light of recent events with COVID and then with what's happening in Ukraine, but then how do we learn from these instances so that we're able to better adapt? And what we see here, the challenge and the opportunity is in creating systems that are functional, inclusive, and efficient. So you're going to have many producers, many processors, many millers all working together in coordination. And so if any one of them fails, an alternative will be available and step up in its place. So that's how you're able to create a sustainable, functional, and resilient system.
And the public and private sectors, have roles to play in this creation of a resilient and sustainable system. Private role, could you highlight, some of the roles that these two, different areas have to play?
Definitely. So the issues are quite complicated and multifaceted. So both parties are going to have to work together here. From the government angle, they start off with policy. So what sort of trade policy are going to be in place? What sort of policy towards infrastructure development is going to be in place? And that's key and crucial, is to set up an ecosystem that's going to be functional and efficient. Second is in financing, right? So the government has the ability to play a transformational role when it comes to funding SMEs and other agribusinesses in the sector, enable them with blended or patient capital for them to grow. On the private sector side, the focus should be on training and capacity building. So what sort of programs can the private sector implement that are going to enable a smallholder producer to be more tangible and responsive to shocks that take place, enable them to grow? Another aspect of that is the use of technology that's going to be adaptable to their local environment. So what sort of innovations are in play that can be used? AFEX had an experience when we partnered with a different company that provided drip irrigation for smallholder farmers. And that's a way for them to boost their productivity and be more efficient with the use of water. Now, you have to be careful because the protocol was a bit too complex, so you have to then adapt it to the local usage and local standards. But yes, so both government and private sector have a role to play in this together.
And as a leading commodities exchange in Nigeria, what's AFEX doing to help producers combat the agricultural risks and shocks that we're talking about?
So the focus is on improving and boosting smallholder productivity. So if a smallholder farmer can increase their yields, that means more money in their pockets. More money in their pockets means they're able to absorb, adapt, and change with any risk or any shocks that could occur. So first and primary on this is creating the demand. So we provide market access to farmers, enable them to grow products that are actually going to be a market for them and they can sell and earn high yields and rewards from. Next is focusing on the inputs and the quality inputs that we provide. The more inputs that are used, that can also boost their productivity. And finally is in the training and assistance that we provide along the way. So what sort of crop diversification should they use? How can they adapt technology to what they can grow? And all these are going to make them more adaptable and help them to respond to crisis and other shocks better and improve their yields and improve their savings as well.
All right, Emense Oka, Vice President, Corporate Services at AFEX. Thank you so much for sharing your thoughts with us.
Thank you.
We'll take a breather now, just before we head to the markets.